Welcome to another short video on the outcome of MPC meeting today. I will tell you that the action of the MPC meeting today has triggered a real extreme volatility going forward. We can see the impact of MPC meeting in the last 3 meeting they had consecutively. Within this period of 3 meetings, they have increased MPR with 400 basic points. The first one, they increased it around from 11.5 to 13. That was that was the what 150 basic points, and that was done on the 24th of May, and that was this mark. That's why I put this mark here, blue, and the market was down that same day. You can see it here. Then the second one, on this day, they had interest rate or MPR monthly policy rate by 150 basic points from 11.5 to 13. Then on the second meeting, they did another 100%, 100 basic points up, bringing it to 14% MPR as at the end of July 19. Finally, today, another one high. This was unprecedented. The beat market, all market focus analysts and economists, all the focus today were based with with outcome of MPC meeting. I have said it in one of my discussions that the same committee that have refused to increase rate post COVID-19 and COVID-19, that since the first meeting they have turned to be another thing else, and that was really manifested today at the end as they increased the award on MPR with another 150 basic points, bringing all together 400 basic points within the last 6 months. Let me put it down. The last 6 months, from the month of May, June, July, August, September, that roughly between 5 to 6 months, we have seen no rate hike by 400 basic points. This is massive. And also, this rate hike played two major roles: cost of fund and also money flow. Once you hear interest with what? With money. And money is what we also trade in the market. As we speak now, once there's a rate hike, the money will start leaving one investment window to another, looking for where a higher return. And also cost of fund for the real estate sector also will increase. Now that we have seen a slow recovery recovering so far in the economy, with this hiking rate, we are going to see more contraction going forward. And that has a lot of CPN is to match inflation. Yes, they say inflation is hitting hard. We agree, it's clear all over the world. You can see that the whole central bank has gone hawkish in terms of monetary policy tightening. But that will not help the economy. If that way, the economy is going to protect with hike, would rather collapse on their head if care is not taken. But in all this, it's an opportunity for investors to make money. You can see that the headwinds in the economy has been a range from slow growth to hyperinflation, and also central bank of rate hike. These are the three major things that also keeping the economy where it is globally, and that is why fear of recession is all over the globe because of what the central banks of the world are in now as we speak. For that, investors also look at how they can take advantage of all this, and this also will trigger, as we are seeing from leaving one instrument to the other, will also affect most of the company because of high cost and when we already heated cost cost environment to R that is called demand push inflation. On that note, we expect that on the end of the day, this is going to affect some company because the risk sector will be hit because of high cost of fund, and that also will slow down some performance. It might not be immediately in the Q3 number we're expecting because the quarter has already ended as from the last quarter of the year, and this is why investors also play very intelligently and also be very cautious in what they are going to do, because I will tell you, despite the opportunity that in the market, there are some stocks or some industry that is no go area as speak with this last rate. That is why you need to be at the common masterclass where those stocks that will be disposing to enter those sectors and those individual stocks that have capacity for you to defend, to play like defensive, and at the same time able to match what is inflation in terms of return because of their yield and also because of their return. That is where you should be, and this is going to discuss in the coming masterclass. I look forward to see you there. But on that, if we're going to see all this, that is why now which sectors and which industries are going to benefit from this. And these are part of what we're going to discuss there You know some of them already, but in that, once you know already which company has the right, because I tell you that once you're looking at fundamental, you want to also look at the technical aspect of it. What is the what money flow in that company? What is the momentum behind that country and that company? What is the share? Where is the share going? What is the vote supporting it? You need to know. Yes, you might see positive policies among my sentiment or no settlement policies affecting the industry, but you need to know which one in that industry that you should play and which sector you should at this time avoid totally, in your portfolio. Because once they are hit with cost, with high cost, automatically it's going to affect their bottom line. And you know that it is earnings that price feed on. Price feed on earnings, and if earnings are not coming, and also when inflation also continue to gallop, the people purchasing power also is going to be lessened, and that is why also you want to look at, because when you are producing and these goods are not leaving your shelf, where will you be? And you need to be a sector, even when there's increase what in their price of their commodity or their services, there will still be demand. These are what you should be looking at, and that is why I put this so that you will know. You saw what happened here when the market rebounded before it put back, and you can see from the first hike, market touched the highest here. Since then, that was around market touched about 54,290.8. Since then, market has been what on a downward, on a lower low, on a lower low. All this you can see. Before we now see what a lower high here, that's in a lower high. We can see the market is also going down. Today is the day that 27th of September, market closed in red, And like I said yesterday on one of the TV program I attended this morning, that what we saw yesterday, yes, it is a bullish engulfment, but can we call it death cap bounce? We can see, but now we saw a rebound. This one will also see a slowdown, and market reacting to what this action of this decision of FPC. That's why I say we're going to see what extreme volatility going forward. But in the midst of extreme volatility, I will tell you that there's opportunity in the market, that you should not panic. Yes, there will be slowdown. I agree, and that is why between now and the coming master class, we expect some stock to correct, some sectors to correct, to become more attractive for us to enter. Because I believe that once there's adjustment, all eyes are what on the rate. But some other investors in the market that want to play safe also want to look at how to preserve capital. Also be looking at what the interest rate inflation will be doing. If we are seeing already 15.5 as adjusted today, what will be the interest the inflation rate for what for the month of September, that will also be coming week after, not the week after, and that just give you that the balancing of your portfolio is very key now. And that's why I said in this there's also opportunity for you. But what we need here is that for you to take advantage of the opportunity, you must understand where the opportunity is, and at the same time prepare as a trader or investor to take advantage of what you're going to see going forward. I will tell you that the market is not going to be remain as usual. This is time for you to take advantage of technical analysis, and also to know who stock to be, and also not to be greedy. You have to play with all your necessary tools to protect your capital is key. So if you have been stuck in any sideway movement, or also you are not clear where the market is going to do, so now this is the time for you to find a direction by attending the master class, so that will make it clear all the ideas, failed ideas will be revealed to you as you attend what the coming master class next Saturday. It will also give you a chance to hear from me also, and also other experts that are going to join me in this master class, so that at the end of the day, you're investing and you're trading, you become a leader in way also educate you or more on how to trade with confidence. These are what we're going to say, and also going to share actionable strategy that you can implement in your trading and investing right now, because the market is becoming more volatile, and you need to also change your dimension. And that's why I said you must not miss what this training. As I tell you, people are still registering, which also are looking forward for you to also to register, so that your seat will be reserved for you. But I'll tell you that no matter what has changed now, at this coming master class, we're going to give investors only just two stocks that will give you, in 90 days, more two times what inflation rate is today. As inflation rate as at today is about 20.52%. At the end of 90 days, which we are going to from the last quarter of the year, we are going to tell you that rate stock that will give you two times what is inflation rate, because you imagine what it's going to look like in 90 days. These are why it should be also be in the master class. And that is why I said don't miss this opportunity, and we are ready to guide you into buying the right stock, and also selling those stocks that will put you in a bad situation. Because I tell you, as the economy is changing, the headwinds in the economy is not helping matter. And for you to play in this kind of volatile market, you must understand what you are doing. The sector that will give you good yield because of what sentiment and also policy have impact that sector positively. That is where you should be now, and that is also what I see that the PFAs will be doing. And for that, want to enter ahead of them. PFAs would like to see the numbers of Q3 because they didn't act on the strength of Q2. We are also taking advantage of time because time is very important in equity investing. We want to take at the 1st of the October. That means at the next day, that is on the 3rd of October, you are starting, you will hit the ground running immediately by looking at your portfolio over the weekend, coming to know the one that you dispose and the one that you will increase. If already in them, your confidence will be there for you to hold that position. That is how to go in this market as we speak. I look forward to see you at the master class. I will say, don't panic because of the world. Yes, expected that we'll see a kind of reaction, but pullback is expected. After that, you see a rebound, and that rebound is where you want to take position. As we speak now, if you look at this green line, this 50 days, 50 days, moving average exponential, and you can see the market is below it. And okay, if you go back and look at the weekly, also at the same time, that's like weekly is above during the period of, you can see the first, second MPCI is what we are seeing this line. You can see, and if you look at the price structure, you can see that this is a declining price structure, but opportunities are there that once market will to resist breaking down this green line, that will give us a good position. Also, on a weekly chart, market is sitting also below the 20 days moving average. You can see it on the Bollinger Band. That's why you need to also look up to that trend so that you're able to put your portfolio in the right perspective. You can actually see that in the last since MPC meeting on a monthly chart, that market has been trending down. This is an impact of what interest rate. I tell you that interest rate impact every market, both stock market, physical market, all. But funds will be looking for where there's a higher return, and at the same time, cost of funds will also affect the risk sector. That's why we also look at which sector that this hike was going to affect the activities. You have to adjust your portfolio at the right time. See you on Saturday, and also take action to register and also be part of the team by Saturday by God grace. I say enjoy the rest of your day. See you that day, and I believe that your portfolio will not remain the same at the end of what the almost how many hours, more than 8 hours meeting, you will not remain the same as your portfolio was to look up and to feel that yes, you have attended. Thank you, and enjoy the rest of your day.